Hello and welcome. You're watching Your Trades on ET now with me, Snehisha, and with me is Shreyansi Singh. And Shreyansi, well, we were quite cheerful about the markets towards the middle of the trading session, but take a look at what's happened to the markets right now. It's fizzled out absolutely. All the gains that we had seen in today's trading session that were looking optimistic have all fizzled out towards the end of the day. The market pressure is back once again, and we have seen a deep shade of red on the screen because remember at one point we were above the 23,200 mark, and now we've even struggled to hold on to the 23,000 mark. That's the kind of fall that we have seen on an intraday basis when it comes to Nifty 50. On the spot basis, if you take a look at it, it's rather flat, only a slight negative bias, but it's a big 200-220 point cut coming in from the day's highest point when you take a look at the Nifty. Let's also pull up a Sensex and take a look at what the Sensex has done in today's trading session. Largely in tandem with the Nifty, also closed in the red, only nominally, but a big cut coming in from the day's highest point on the Sensex as well. You have Nifty Bank that's closed lower by 0.2%. India VIX had spiked above the 15 levels, but then subsided a little, just a 0.4% uptick coming in on India VIX, and it has managed to close just shy of that 15 mark. That's where the India VIX is. Sectorally, if you take a look at the Nifty mid-cap and small-cap, mid-cap was the biggest gainer in today's trading session. That's managed to close in the green, but just a 0.2% uptick, and the big fall coming in on the mid-cap index as well. Small-cap, however, has shifted to the red, and 0.4% cut coming in on the small-cap index. Sectorally, let's take a look at what's done well and what's not. Pharma, realty, metal, media, they are your biggest sectoral gainers. On the flip side, IT was the one that was languishing away, a 1% cut on that front, along with PSU banks, FMCG, auto, bank, energy. These are the indices that have ended in the red in today's trading session. A couple of stocks that merit a special mention today is Kotak Mahindra Bank. First of all, now that the RBI has lifted the curbs on their credit card issuance and onboarding new customers on their online platform, that stock did pretty well. A couple of hikes in target price coming in from UBS and HSBC, so that stock looked good today, 1.5% uptick. You had Honasa, Swiggy, all of these stocks were in focus. Shreyansi, tell us why.
Well, absolutely. Lots of these stocks in focus, and you did, of course, have Honasa Consumer that went home with gains of just about 11% coming in. Quite a move coming in as far as that stock is concerned. It was a good quarter for that particular counter. There you have it, 10.7% thereabouts. The kind of gain that you saw coming in. As far as Honasa is concerned, of course, you did have Kotak Bank, where you've seen RBI lifting curbs after 10 months. That was also buzzing away in trade. Went home with 1.5% uptick, that one. And Swiggy, of course, is going to be charging higher commission. That is a source-based story that we're going to be getting you, and that is an important update coming in as far as Swiggy is concerned. Other than that, it's of course PM Modi's meeting with Trump that is very important to watch out for on the count of commentary coming in on both trade as well as tariff fronts. Now, in terms of the backdrop that this meeting is against, you did have Howdy Modi as well as Namaste Trump. Those were the kind of events, and that is the kind of diplomacy backdrop that this is all coming against. So it would be very important to watch out for any sort of commentary coming in on the tariff front. Other than that, you do have the new income tax bill that was also tabled in the parliament, a simplified one at that, Snehi. So definitely something that we were looking at. But tell you what, let's also decode the kind of market setup that we have with Kunal Bothra. Then Kunal, firstly, I just wanted to ask you where you see value emerging at this point on a sectoral basis.
Yeah, I think value-wise, the entire market is at a value, frankly, because I think everything is at a discount, mid-caps, small caps, whether it's in terms of stocks, sectors, defense, PSUs, as a basket. So I think there's value, of course, on a larger market scale. But then I think what we need to identify is that in case if the markets get back into a zone of stability as well as some bit of steady recovery, then I would believe that what matters is we need to find stocks and sectors which are relatively more stronger. As of now, it looks like that banking sector, and especially the private sector banking names, is where the flows are moving into. We've seen steady outperformance coming back into few select private sector banking names. Yes, there have been some news flows attached towards few odd private sector banking stocks, but then I think that's largely the construct of how sectors they start to get back into a zone of outperformance. Initially, it's the price action which gets lot more robust, and then the news flows and the events surrounding these stocks, they start to improve. So as of now, it looks like that banking, and especially the private sector banking names and the financials, pocket where you've seen Bajaj Finance, Finserv, then there have been, strong moves from Chola Finance, Shriram Finance is also one of the other names just showing signs of strength. M&M Finance had shown good recovery from its previous lows of 250, 260 thereabouts. So there are a lot many stocks in this space, financial services, as well as private sector banking names. That's where I would probably believe that there's more value as well as more relative strength.
Okay, so these are the sectors that are looking good to you. Kunal, also help us understand with some stock-specific recommendations that you would have amid a market like this.
So I'll go with a bit of a risky strategy, risky trades over here. The first one is one Tata Steel, a stock which I believe is retesting the levels of 50 DMA twice or thrice in the last 1 to 2 weeks, and I believe that's a very strong signal that the stock is gearing up for a breakout. So would back this move for Tata Steel over the very near term. 143 as a target, stop us at 133. And the second would be a BAN SBI card, something which I've been bullish on over the last few days, and the stock has done exceptionally well from 800 or 780 levels to 860 thereabouts, where the stock has closed today. Would look out for targets in the range of 900, stop us at 830.
All right, thanks Kunal for those recommendations coming in. Of course, Tata Steel is going to be focused on the account of that fundraise coming in tomorrow. So that's the one to watch out for in terms of stocks as well. But tell you what, let's get you some important commentary coming in from Rajiv Batra, who's the head of India, ASEAN as well as APAC, excluding Japan, China equity strategy at JP Morgan, who shares a whole list of sectors and spaces where he sees value emerging. Let's go across and listen in to which are the sectors that make it to his list.
We upgraded post-budget consumer discretionary ex passenger vehicle overall, and we, you can say, booked profit or neutralized our overweight on industrial sector. That made us overweight now on financials, consumer staples, consumer discretionary ex passenger vehicle, healthcare, and real estate. How we are funding it this through? We are underweight on energy sector. We are underweight on material sector. We are underweight on passenger vehicle, or largely you can say auto. And we are neutral on energy, but with more, you can say, a kind of a negative deviations to the benchmark based on our portfolio allocation. So you can say marginally negative. The reason behind this, if the things are getting a bit stable or selective on the capex side, your commodities will take a hit. And knowing the neighboring country, China, where they also are willing to grow this year more through consumption rather than fixed asset investment or a trade pattern, then definitely it is not a great news for the commodity space. So that makes us a bit bearish on the commodity side. On passenger vehicle, again, if the demand is coming back in urban areas overall, it is not going to be on the high-end basis or even on the mid-end. It will be on a low-ticket discretionary item. So that will be supportive at max on the two-wheeler side.
That's the expert word coming in from Rajiv Batra of JP Morgan. Let's move on, take a look at how the F&O space, the entire derivative space, has shaped up today. If you talk about the index future trend for the February expiry, not surprised to see a mild long unwinding coming in on both Nifty and Nifty Bank. Remember, yesterday we did see some fresh longs being built on Nifty Bank on the back of the positive momentum that the market saw yesterday. But once again, all of that has fizzled down. And on the back of that, we're seeing some mild long winding happening when it comes to the Nifty. If you take a look at the India Wix, that has just ended shy of that 15 mark. So nonetheless, a very less uptick coming in, 0.4%. So we're looking at least healthy when it comes to the India Wix mark. When you take a look at the active calls and active put strategy for the 20th February expiry, call writing being seen at 23,100 and 23,200. Yet again, once again, making 23,200 the next resistance to cross. Because remember, even though we did cross that today, we were not able to sustain anywhere close to those levels, and we fizzled out about 200 points from that mark. So not looking healthy at all, and resistance continues to be maintained near that 23,200 mark for the Nifty. On the flip side, if you take a look at active puts for the 20th February expiry, put writing being seen at 23,000 and 22,900. So we do not have a support visible as of yet, but 22,900 seems to be a mark of contention for the Nifty on the lower side, and 23,200 is going to be the next resistance level that the Nifty is going to have to try very hard to cross on the upside.
Alright, then those are the levels that you should keep in mind when it comes to the derivatives roundup and how that is shaping up at this point. But time now to take a look at an ET Now exclusive, because it's sources indicating that Swiggy is likely to hike commission charges, and that has also been communicated to its partners. In fact, Anjali is standing by with more exclusive details. Anjali?
That's right. We've learned from sources that on the 11th of February, Swiggy had sent out emails to select merchants regarding a 2% collection fee that will be levied on them starting 16th of February. Now, the email also mentioned that these will be deducted from the payouts of these merchants, after which the National Restaurants Association of India took up this with Swiggy, and they have been informed that only 10% of the merchants have received these emails, and the other 90% were already paying these collection or payment aggregator charges. But Swiggy has said that they will be issuing a clarification email which will be sent out to these merchants, as the tone of this email did not convey the intent. Additionally, they will also be reaching out to each of these merchants individually, and they've assured NRAI that there will be no unilateral changes in the commission. And we have also learned that restaurant body NRAI has said that Swiggy will be holding discussions one-on-one with every merchant before they increase any commissions or add any new collection fees to their payouts.
Okay, Anjali, thank you so much for taking us through those exclusive details. Swiggy has closed with gains of 7% in today's trade, so looking good for Swiggy. Another stock that has logged in stellar gains in today's trading session on the back of some very good Q3 numbers is Honasa Consumer. That stock has closed with gains of almost 13% today, because it's a beat coming in versus the street estimates on PAT, EBITDA and EBITDA margins. Revenue at 518 crore, which is an uptick of 6% year on year, is largely in line with what the street was penciling for Honasa Consumers, which is popularly known as Mama Earth, for its Q3. Net profit, however, has come in at 26 crores, which is, although an uptick only of 0.5%, it is still very surprising positively for the street, because they have turned profitable at 26 crores compared to a loss of 18.5 crores that they had incurred in the last quarter. Remember, this was largely on the back of the trade correction, the general trade correction that they had undertaken in their inventory in Q2, and some impact was seen on that front. Remember, last time when the numbers came out in Q2, that stock was locked in lower circuit of 20% for consecutive trading sessions, and today that stock after its Q3 earnings is up 13%. EBITDA has also come in at 26 crores. Once again, it's turned positive versus a loss of 29 crores sequentially. EBITDA margin continues to be under pressure at 5% compared to 7.1% year on year. The underlying volume growth has come in at 1.5%, very low from the historic levels, but nonetheless a positive volume growth once again is positively surprising for the street. Some important con call takeaways, wherein the management has said that a major part of their inventory correction was taken last quarter, and now the company wants to focus on stabilizing the new system. Honasa has completed the appointment of Tier 1 distributors in the top 50 cities. Remember, they were trying to shift their focus from super stockists to direct distributors, and that is almost done in the top 50 cities. 7 to 8% of the business comes from quick commerce now. What's not done well is the Mama Earth brand performance has been similar to Q2, so that continues to be subdued, but the management aspires for double-digit growth from current levels in the long term. Also, an important statement that the company has given, that they expect to maintain FY24 margin level for FY26 as well, and margins will improve FY27 onwards. Lastly, what brokerages are making of these numbers, Antique has maintained a hold rating with a target price revised of 217 rupees, cutting it down from 370 earlier, but nonetheless this is on their FY27 forward EPS, so still looking healthy for Honasa. 13% gains almost on that stock today.
Well, absolutely. That was one counter that was buzzing away in trade, but a whole host of stocks that were in fact buzzing in trade. Of course, you did have Natco Pharma that was tanking in trade. Other than that, SBI Card, Ipca Labs, all of these stocks were buzzing away in trade. Rabinder, in fact, is joining in to help us understand the key triggers coming in for all of these counters.
Well, SBI Cards and Payment is in focus, where Macquarie has upgraded the stock to outperform from neutral with target price of ₹1,000. They say that the SBI Card is expected to benefit from a recovery in unsecured loan cycle, and the channel checks suggest that the credit card slippages are stabilizing, and Macquarie expect a EPS growth of around 40% between FY26 to 27, mainly due to lower credit cost. Moving to next, Natco Pharma were also in focus, where company has announced its Q3 number, and the company revenue and PAT both saw a decline of almost 38% year-on-year basis, and margins also saw a sharp decline from 35.3% to 8.2%. Moving to next, Ipca Lab were also in focus, where the company's Q3 revenue grew by almost 10% year-on-year basis from 2053 crore to 2245 crore, and net profit also saw a uptick of 38% year-on-year basis from 180 crore to 248 crore. Margin also saw a uptick of 450 basis point year-on-year basis, and the Indian formulation income grew by 13%, and export were also up by 6%. And lastly, on back of brokerage note, Jubilant Foodwork were also in focus, where Jefferies has maintained their buy rating on Jubilant Foodwork with target price of ₹1,000. They say that the Jubilant Foodwork is the top pick in consumer discretionary sector, and the India same store sales growth was in double digit with management focus on growth, and the earning call highlighted that the new product launches, faster delivery and targeted discount.
Okay, Ravinder, thanks so much for taking us through a list of all of those big buzzers in today's trading session. While we are talking about stocks that made an impact today, Kotak Bank is the one we have to talk about because investors cheered RBI's move of lifting curbs on its digital business. Brokerages believe this move will help margins recover and stabilize the unsecured loan book. Mix Gaurav, who tracks the sector closely, is joining us to tell what it means for the bank's growth prospects going ahead. Gaurav, take it away.
Well, yes, RBI imposed this ban on Kotak Mahindra Bank on issuing new credit cards and onboarding new customers via their online channel 10 months ago, and after 10 months now they have lifted this ban. So first let's understand how the financials have changed for Kotak Mahindra Bank, because there were two ways where the bank was impacted. First was financials and second was valuation. So in terms of financials, before this ban, Kotak Mahindra Bank was actually increasing their credit card portfolio at a rate of around 20%. They were onboarding new customers via their online channel almost at a rate of around 25% over the last 5 years. But when the ban was actually imposed, we saw this segment actually took a hit. In fact, the entire unsecured segment slowed down. Credit card growth was only at around 2% in the last quarter. In fact, when we look at net interest margins, there also we saw an adverse impact of around 30 basis points in the last 3 quarters because of the unsecured mix change that we have seen in the bank. In fact, when we talk about ROA, there also we saw a fall, and at the same time cost to income ratio for bank increased in the last 3 quarters. But now the ban has lifted, we will see these ratios coming back to what we have seen earlier. In fact, we have also seen management being a little optimistic. When the ban was lifted, management had said that they will be increasing their unsecured mix to almost 15%, which is now at around 10.5%. This will give push to income and at the same time net interest margins. On the other hand, when we talk about valuation, Kotak Mahindra Bank's valuation was somewhere around 2.6 times price to book, which has now come down to around 3 times, which is lower than 3 year and 5 years average valuation. So definitely two positive impacts that we will see on the stock price. On the other hand, when we look at brokerages, they are also being bullish on this news. What they're saying is that Kotak Mahindra Bank can actually see a push. In fact, they've got JP Morgan Stanley who are being bullish on the bank. On the other hand, we also have UBS who increased the target price to 2,100 rupees because they have raised their EPS estimates almost by 3 to 5% for the next 2 years. On the other hand, we also have HSBC who also increased their target price to 2,210 rupees because they also say that the pressure on NIMs can actually ease off from here on. So definitely a positive move coming up for Kotak Mahindra Bank. Brokerages are also being bullish.
Alright, with that, we're completely out of time on this edition of Your Trades on ET Now. Thank you so much for tuning in.